It's the world's largest online streaming service that has seen its fair share of headlines for raising rates. Netflix has introduced a new program that has both users and revenue rising. Here to dive into Netflix's latest growth drivers is market beat analyst Jay Yu. Jay, commercials are kind of a thing of the past, but they seem to be making a comeback on Netflix.
Ad-supported revenues is basically a game changer for Netflix. For the longest time, they've held out from having commercials on their service. But once they embraced the ad-supported programming, that's when their growth resumed again. They were able to basically add 40 million new subscribers in less than a year, and it's continuing to grow.
Yeah, what is that new advertising model meant for revenue?
Right. So basically, with the ad-supported tiers, they are able to do conversion. They don't have a free tier anymore. So the lowest tier is $6.99, and you have commercials. If you want to get rid of the commercials, that's when you can get on the standard tier and upgrade to the 15.45 level, or the price your premium level. It's added a new revenue stream to the company. It's obviously a conversion tool, and it's also been able to help Netflix expand its reach by bundling its service with basically competitors. There are packages out there now where you can get ad-free or an ad tier Netflix along with Disney Plus and Hulu, or Peacock with Netflix, etc. Almost like the cable packages. And this allows Netflix to basically bring new people into their ecosystem.
Yeah, as consumers have been noticing these new package deals that, yes, reminds you a lot of the old cable system for sure. Of course, this new program is designed to bring in those new users at that lower cost of entry. Everyone was so upset when Netflix was raising its rates so much, but this is a great point of entry for a lot of new users, especially in other countries. Talk about how Netflix is planning to use this advertising supported content to help get some more of those international viewers.
Right. So basically, their growth is in international. They've already almost saturated, North America and Canada. So they're thinking of even putting out an ad-free tier overseas. Now they haven't made any announcements, but that would definitely boost user engagement, and would definitely open the floodgates for people to try Netflix. And in the latest quarter, they have said that 45% of their new subscribers came in through the ad supported tier, the lowest tier, where it was available.
Yeah, that international growth was one of the growth drivers you mentioned, along with the advertising. But the third point you mentioned in your article about four growth drivers for Netflix was also about margins. Talk about how, the user numbers and the advertising has really impacted their margins.
Right. In 2017, Netflix only had 7% operating margins. This was before advertising. Now in 2024, in their second quarter, they recorded a 27.2% operating margin. That's come from obviously price hikes, password crackdowns, operating efficiency, and their fixed cost content licensing model. Uh, Basically, they are buying new shows, new programs, new content at the cost of production plus a 30% premium. And this is actually a lot cheaper than TV shows, where the networks would actually, buy TV shows content for production costs plus a 60 to 70% premium. And that's all gone straight to the bottom line and obviously their operating margins.
Now let's move on to your fourth point, and this is an area I haven't personally explored on Netflix yet, but they're trying to get into video gaming. People obviously spending a lot of time, which would increase their time on the platform. What's Netflix doing to get into that sector a little more?
So Netflix has been adding video games to their core service. This is pretty much meant to upgrade its core service and improve user engagement times. Ultimately, I think Netflix wants their platform to be, well, an engagement tool around the block, all over. So as far as these um, interactive games, they're really focused on having mobile users actually use play these games, stay engaged with the platform. That just means more eyeballs for advertising because they can have in-game advertising. Ultimately, they want to have these games done in-house. And we're not talking AAA rated studio games. We're not talking Final Fantasy or anything like that. But on a mobile app, as long as you can keep users engaged, that's going to help their ad revenues.
So, what do all of these growth drivers mean for Netflix stock?
Right. So basically, Netflix has been hovering around that 700 area. That's actually been a resistance. So when you have a resistance area, and the thing with Netflix is that it had peaked around 697.49 and then sold off very hard down to the 592 area, which is also the anchored VWAP support, and then shot right back up to all-time highs and is again finding resistance right around that 700 area. And that's called a V bottom. So investors looking for entry into Netflix should always wait for a pullback. There are Fibonacci uh, price retracement levels that are in the article. And another way of basically being patient to wait for a pullback to enter is by using what's known as cash secured puts. And if once you get assigned, if you do have a position, you can actually have some income coming in by writing covered calls. And this is called a wheel strategy. Details are in the article.
Some useful tools for investors. Thanks for this deep dive into Netflix, Shay. Stick with MarketBeat for more information on this stock and many others. And as always, happy investing.